G'day folks, welcome back to Pete's Investing. It's the 15th of June, the weekend. This is the update for platinum, copper, iron ore and crude oil. You'll notice copper and iron ore have shifted sideways since our last update. Platinum's dropped and crude oil's risen slightly. In terms of our heat map, on top left there you'll see our review for today. There's a bit of a mixed signals across the board. Bullish and neutral on the monthly, neutral predominantly on the weekly, and bearish predominantly on the daily. So just be careful as we go through each of these, and I'll explain what each of these mean based on the CCI 150 trends, plus a few other instruments for your reference should you wish to look at those as well in terms of trends. In terms of our trading strategy, we look at trading in the direction of the higher time frame. So if you're trading on the daily, we trade in the direction of the weekly, or if you trade on the intraday, we trade in the direction of the daily. We use a CCI 150 look for a fresh breakout from the moving averages, and I'll go through some examples how to read those. And to close the trade, we look at the CCI 150 entering back into those moving average ranges. So first looking at platinum, and we look at the weekly, monthly and daily charts. So first off on the monthly, you'll notice it's above the moving average range. That's giving us a bullish signal. On the weekly, it's broken into that moving average range, giving us a neutral signal, and it's below the moving average range on the daily, giving us a bearish signal. So you can see it's dropped off quite significantly over the last almost month now. Now, we also look at divergence, and there's no divergence on the daily. There's no divergence on the weekly and no divergence on the monthly. So on the higher time frames, no divergence. And if we jump to the hourly chart, we look at that for opportunities there's usually more divergence in the lower time frames. So you can see here currently we've got a bullish divergence, higher lows on the CCI 150 on the hourly chart versus lower lows, and we expect that to bounce and hit the minimum target range. And that minimum target range, for those new to the channel, we draw a Fibonacci between that point and we go back to the previous point before that divergence started, so I'll take it to that high. So the minimum target range will be the 23% to the 38% level. Now you can see there it's probably just touched that 23%, but we expect it to get into that level at the very least. Of course it could go a lot higher, but we always take that as a minimum target range. And the way it looks at the moment, it looks like it will probably move high because the CCI is actually still rising and there's no sort of sign of a pullback yet. Now, I'm not suggesting you trade this. This would probably be an opportunity to exit the short trade if you're going short. In this case, look at divergence. If you see a bullish divergence, you probably look at the opportunity to exit the trade and take your profits off the table. Next, we'll look at crude oil. This is US crude. On the monthly, we're neutral. It's in that very thin band of moving averages. That's giving us a neutral signal. On the weekly, it's broken below those moving average bands, giving us a bearish signal. And on the daily, bullish. It's broken above those bands. So we do a quick check again for any divergence. And there was a small divergence back here historically. That's already played out. Sometimes these smaller ranges are more volatile. You can see there slightly lower highs versus a double top there on that, hit that resistance at 87.22, and it's fell off quite sharply. In this case, had I drawn a Fibonacci retracement, it would have gone back to that level. So let's just expand that to make it a bit easier to read. So if we drew a Fibonacci between that low and that high, again you can see there a minimum target range would have been in that range between the 23 and the 38% level. In this case, it's fallen well below the 61% level, and it's bounced off that support at 72.45. So again, we only trade in the direction of the higher time frame. So again, if you're trading on the daily, you wouldn't be going long until you see the weekly break to the upside as well. So for example, using this period back here, you would have taken long trades on the daily when the weekly was bullish as well. At the moment, you would only be taking short trades when the weekly is going below those moving average bands. So you would have taken those short trades across there on the daily. But if we go to the hourly chart, again, if you're a day trader and you're intraday trading, we only trade bullish movements at the moment. So it's broken above the moving average band on both the price and the CCI. So you only take long trades, and that would have coincided with that period back here. Now notice, this one's probably not a good idea to trade because you'll see there that's almost a double top. It's strictly that high there is strictly higher than that high, but I'd still consider that almost a double top on the CCI. And you'll notice the price is going sideways and the CCI is still dropping. So that may well come back and fall back further than where we are at the moment. So I would consider that a double top on the CCI versus higher highs on the price and a retrace to the downside. So just be careful about trading this one until we see a more convincing break to the upside. In other words, the daily is going long. I'd like to see the CCI start breaking to the upside to be more bullish. So for high grade copper, on the monthly we're bullish, although notice it's pulling back as well, so just be careful. It's bullish on the monthly. It's neutral on the weekly. It's within that moving average range of the CCI. And on the daily, it's been bearish for a number of weeks now. We did have this bearish divergence. Again, always pay attention to divergence versus higher highs in the price. And in this case, it fell back. And we've drawn a Fibonacci retracement here. And you can see there between the 23% to the 38% level, it hit it quite easily. And it's actually bounced down near the 50% level. I'll just delete that Fibonacci range. And it's hit this support level at the moment, 44,356. Now on the hourly chart, again using the daily as a reference, we only go short. So you would have gone short from that period back there in that week. And that was the 22nd of May. And we go back to the 22nd of May. That coincided with this period back here. So you would have taken short trades only if you're trading on the hourly from that period back there when the CCI broke below the moving average range, and also when the price breaks below the moving average range of those moving averages. These moving averages, by the way, are in the description below should you wish learn to how to draw those on your charting software. And you can see there it fell off, and you would have closed out the position at that point there. Now some of these moving sideways, you'll notice the CCI is rising versus slightly lower lows on the price, and that's a bullish divergence, and the price actually did bounce up from there. So again, that was a bullish divergence. Again, another short period back here, going short into that there, the CCI below its moving average, and you would have entered there and closed it out when it hit the moving average range, and so on. Lastly, looking at iron ore. Now there's no CCI on the monthly, but you can see that's pretty much, I'd call that a neutral if anything. On the weekly, it's broken in that moving average range, giving us a neutral signal as well. And on the daily, it's bearish. It's been bearish now for a number of days. It's actually starting to enter into that moving average range. It'll most likely enter into that range in the coming days, giving us a neutral signal. So at the moment, you would have gone short on the hourly if you were trading on the hourly only. So again, in this case, you would not have gone long or short on the daily because the weekly is a neutral positioning for the last couple of weeks. But if you're trading on the hourly or intraday time frame, going to the hourly chart, again, here's the daily chart as a reference. You would have gone short from that period back there, and that coincided, you can see there, with this period here. The CCI is below the moving averages, and so is the price, and you can see each of those points you would have entered and exited when it entered the moving average range, and then and so on until this point here, and you would not have entered any short positions until you saw the CCI break to the low side. Now you might have had a false break on that one, but them's the breaks. You take your profits with your losses occasionally. There's no 100% strategy in any trading strategy. So that's where we're at the moment. Feel free to hit that like and subscribe button. Thanks for watching. Give me any suggestions for looking at further indices or instruments for you, and we'll see you in the next video. Thanks for watching.